A very good morning, guys. On the screen yesterday, Nifty slipped 2/3%, but 24,000 held nicely for the second day running, and it closed at 24,052, pinned right between the support. Calm, but then the official positioning dropped last night, and it tells a different story completely. The pros took money off the table, the foreign desk got more defensive, and the retail crowd piled in the other way. So today I'm still a buyer, but third day on this support, but that split under the surface is exactly the reason you keep your insurance on. So this is the Tanmay Edge. You are listening to episode 81. I am Tanmay Guttugutti. Let's go. So let me give you yesterday first. Crude was the whole story. Brent ran past $86 on the Hormuz standoff, and the market slipped with it. Nifty down 159 points to 24,052. The Sensex down 561 points to 77,055. But 24,000 held again. The low was 24,023 and the close pinned between 24,000 and 24,100. Under the hood, it was defensive. Pharma, healthcare and metals were the only green, while realty, the public banks, autos and IT were sold off. HCLTech alone fell 4.5% after its results. The foreign desk sold 740 crore in cash. The DIS bought 2,928 crore in cash. And the fear gauge, the VIX, did not fall on expiry like it usually does. It rose up 3.5% to 13.75. Now overnight, the tone actually improved, guys. In US, a cooler inflation number lifted the market. Nasdaq closed up 0.9%, tech back in the front. Asia is green this morning, and here is one thing that matters for us. Taiwan's chip reversed and are up 1.8%. So the selling that hit our IT yesterday has turned, and crude, the risk stopped climbing. Brent is $86, no fresh spike overnight. GIFT Nifty is trading at 24,046, extremely flat to yesterday's close. So the open is quiet, the rupee is still soft at 96.20 and the crude is still at $86. So the tail is there, but it is not getting worse this morning. So here is the twist, guys, and it is the positioning that just came out. The official 14 July book, pros first because they move first. Going into Tuesday's expiry, the pros were long, both the calls and the puts, paying for the big move either way. Overnight, they cut it strongly. Their long calls went from 1,52,000 contracts down to almost 48,000. They have trimmed almost more than 1 lakh calls. They have trimmed the puts too. The smart desk that was betting on a move just took that bet off the table. They are still long the futures, but far lighter on the options as well. Now, for the foreign desk, they went the other way, more defensive. They pushed their index futures short out to 2,65,000 contracts. They added 44,000 contracts, more downside puts, and for the first time in this stretch, they trimmed their big single stock futures long book by around 82,000 contracts. Their whole derivative book reads bearish, and the crowd, the clients, did the opposite of the both. They chased adding a lakh of long calls and they sold even more downside. They are now short 6,29,000 puts under the market. That is extremely bad. That is the widest gap I have seen in a while. The money that matters stepped back and the crowd stepped in, and it is going to get hurt for sure. So what does that tell you? It tells you that this market is not a chasing market, and it tells you that the hedge stays on at any given point because the crowd is short 6,29,000 puts sitting right at 24,000. That is the fuel. As long as we hold 24,000, those writers are fine and the dips get bought. But if crude cracks and the level is going to break, because that is where the stop losses of retail would get hit in. they all run for cover at once, and that is exactly what turns a slow drift into a fast drop. So the levels, guys, and this is important. So the new weekly board 24,000 is the line, the single biggest cluster of bets on the screen on both sides. 24,100 is your first real resistance, that is the heaviest call at over 6 crore contracts. Above that, 24,200, 300, and a far bigger support at 24,500. So support below 24,000 is 23,900, then 23,800. The VIX 13.75 is pricing a move of about 210 points today. So think 23,830 on the downside to 24,280 on the upside. So that is your box for today, guys. Remember this. And the box is much deeper on the 24,000 side. So 23,850 cannot be ruled out. So now tomorrow is Sensex expiry. So a specific word on it, because you have asked for specifics, not a vague levels that I am giving. The Sensex opens flat near 77,050. The sellers have stacked the top hard at 77,500. That is your resistance and heaviest call wall. 77,200 and 77,100 just underneath, and they wrote almost 12 million call contracts yesterday defending that zone. That caps it. 77,000 is the pivot that holds the range, and below it supports are 76,900, 76,500. The board is pricing the Sensex to stay roughly between 76,600 to 77,400. Remember this box into the close. So the 1,000-point band is your battleground. 77,000 is the middle of it. The stance into Thursday, the writers want it pinned between 77 to 77,200 pocket. Fade rallies into 77,200 upwards towards that 77,500 range with a stop above, and bound dips till 76,600. That is your level. Trade those edges, skip the middle part, and one override same as Tuesday. A fresh crude headline beats the pin. If Brent breaks higher, respect the move, do not marry the pin. So here is the plan for today, guys. About 24,000, I'm not only a buyer, but I feel that again we are going to reclaim 24,100 and 24,200. But the buying levels that I am going to do is 23,950, same as yesterday, 950 to 970. 24,000 is the line. Hold it, and the dips are for buying. A third day in a row, and we are going to lose 24,000 for sure, guys, and with volume. And that crude spike, if it happens, then we are going to see 23,900, and if that breaks, that 23,800 is coming, and I'm going to stand aside and wait. I do not want to average it down. I'll keep my insurance open at 23,800 by going long at 24,000, and keep the insurance on. Wall is cheap, the fear gauge is rising, and there is a live crude event running. This is the exact combination where you want to hold your protection, not sell it. Remember who is on each side right now. The pros are buying the protection, the crowd is selling. Be on the side of the desk that is usually right. Two things swing the day. Crude first, watch whether Brent holds 86 or not, or falls below 80, and IT, watch it if steadies now. The Taiwan chips have bounced back, or if it keeps bleeding with the domestic banks. Quick word on yesterday, guys, episode 80. So, but quick word on episode 80, guys. 2.5 out of 5. So direction right, entry too greedy. Full scorecard is available on the website. Have a great Wednesday, guys. The tape has pinned, but the smart money has stepped back and the crowd has stepped in. So remember this, retail is only long, rest all are short. So the market is not positioned for a big breakout on the upside. Buy the 24,000 dip with the hedge without fail. Remember the resistance at 24,100 and 200, that is your selling zone. Only if 24,000 breaks on volume, that is where you step aside. But that is where we are going to buy in first and then step aside, and do not average it. If you found value in this, guys, please Share it with one trader friend who needs it right now. Subscribe to Apple Podcast, Spotify, and listen it live on rupeecase.com where it streams first. And give a rating, guys, and a review if you want to add something to it. Have a happy Wednesday and see you all once again on tomorrow's expiry.